Welcome to Be Home Resources, a place you can depend on for all your home ownership needs. My name is Kathleen Goneau, your real estate concierge, and I'm excited to share with you how to maintain, update, and protect your home investment. Today our topic is all about funding those big projects that you might want to get done in the house. And I'm here with my guest, Matt Packard with Embrace Home Loans.
Hi Kathleen, how are you?
Good. Welcome, Matt. Thanks for coming.
Thanks so much. Thanks for having me on.
So Matt, just so our viewers understand how long you've been in the business and who you are, tell us a little bit about your background in financials.
Sure. So I worked in the banking industry for about 9 years as a branch manager and as a business lending officer. And then I've been in the mortgage industry now for 13 years doing residential mortgages.
Awesome, awesome. And you know, when we think about doing these big projects, a lot of us are trying to save the money in our savings account, and yet a kitchen renovation or some major addition may not get it done. And so I know personally in our world, in the industry, we know there's different ways to make that happen. Mm-hmm. So today, we want to chat a little bit about what are some of our options when we're trying to fund some of these larger projects.
Sure, this is actually a common thing that comes up, Kathleen, especially these days where people are wanting to stay in their house for a long time, but they have a lot of questions on how to finance the renovations. And I'd love to talk to you about how we can help them out. There's many different ways.
Awesome. So yeah, we see those Love It or List It shows on HGTV, and so you got to have that money.
Exactly.
So what is the first option that a homeowner might have to finding some money to do one of these kind of projects?
Sure. The most common thing that people do is do what's called a home equity loan. Mm-hmm. So home equity loans are based on how much your house is worth now, how much you owe on it, and then the equity that's left. So the common way that people get home equity loans are going to banks. Local mm-hmm. banks are usually the most common. And every bank is different in exactly how they handle it, but the most common way that people will, that banks will approve you is up to 80% of the value of your house. So for example, a common thing is $500,000 value of the house. They'll go up to $400,000 total minus the mortgage to help you with those renovations. That's number one where people go to usually.
And so how does someone get started with that? Do they need to know the value of the house before they go into the bank? What happens?
It helps. It helps. The bank will do what's called an appraisal, whether they do a computer appraisal or they have an actual licensed appraiser go out there. A bank will do one of those two things generally. But having a general idea of how much your house is worth by talking to a real estate agent or maybe going on a bunch of websites and looking at the average of what they all say, that's a good start.
Yeah.
So at least you have some knowledge to arm you with when you go talk to the bank.
Okay. So home equity line, I think most of us are familiar with that. Mm-hmm. How does, questions I get all the time is, how does that impact your credit when you open a home equity line? Let's say you don't use it for a while. Is that going to impact other things in your life, your financial world?
It can. So if you get a home equity line, say for $100,000, a common way, which is common, and you don't use it. So it works like a credit card where that $100,000 is your limit, but you don't have to pay anything back until you start using it. When you go get other loans, whether it's a car loan, a student loan, a mortgage, that potential debt of the equity line can affect you depending on who you're going to. A car loan company or a student loan company are probably not going to look at that debt until you start using it, where a mortgage company will look at the potential of that $100,000, even if you haven't used it yet, as potential debt that you can tap.
So that money is actually sitting there in an account ready for you to write checks when your contractor shows up to do your project. It is,
and it's revolving debt, similar to a credit card. So once you use it, you can pay it back and then use it again. That's what revolving means. So if, say the contractor says that your kitchen is going to be a $40,000 expense, you write a check for $40,000, you start paying interest on that. Once you pay that down, you can use that money again, still up to the limit of the equity line.
Awesome. Yeah. So we have the equity line. Mm-hmm. What would be another option that a homeowner might consider for a renovation?
Right. For larger projects is when we start getting into option 2, which is what's called a renovation loan, or some people call it a rehab loan. The reason is equity lines, when you go to banks, they're only using the current value of your house. So if you don't have a lot of equity in that home,
Right.
or if you feel like the renovation is going to be very costly and go above what your house is worth now, a renovation loan will do what's called an as completed value. So for example, if your house is worth $500,000 now, in that first example we used, with the new renovation, maybe it's worth $700,000. We as a mortgage company, or any mortgage company that does the renovation loans, we can use that as completed value and base the loan off of that. So that helps in larger projects. I've had a few clients that have done that have either maybe done an addition or maybe gutted the house and done, usually anything over 50 to 100,000, they start looking at that option 2, which is the renovation loan.
Right, right. And how do they determine that value?
Right, that's again the appraiser. So instead of now doing a potential computer appraisal that I mentioned earlier with the bank, this time you have to have an actual licensed appraiser go out there. And what you do before that appraiser will go out there, you have to get the plans and specs from a contractor.
Right.
So they have to list out what they're going to do to the house. That's what the plans and specs mean in detail. And then the appraiser takes the current home, they take the plans and specs of that work, similar to a new construction house, and then they add those together and then they get a value out of that.
Yeah, so it's like the chicken or the egg. Do you get the quote first, or do you get the money first when you're deciding on doing these projects?
Right. I think the bigger the project, the more likely you should at least get the quote first before you make the financial decision. Obviously, it's good to know how you're going to pay for it financially ahead of time, and don't make a decision until you know how you're going to pay for it. But I think getting that contractor in there so you at least know what your budget would have to be, I think is a really smart idea.
And these renovation loans, are they standard rates?
So that's a great question, Kathleen. So they're not. They're a little bit higher than the street rate. So usually anywhere from 1/4% to 0.5% above a street rate. So if the street rate today is 6% on a 30-year fixed loan, you're looking somewhere between 6.25% and 6.5% for a renovation loan.
Okay. And so I would have that loan separate from my mortgage?
Great question. That's a very common question that comes up, and that's where it's a catch-22, where rates had been so low and now are starting to increase. It's one loan that pays off your existing first mortgage, and you have the entire new amount with the new rate. Renovation loans you can refinance, so when rates eventually do go down, just like everything, what comes up will go down.
Right.
What goes down will come up too, but as we've seen in the past couple of years, right? But the renovation loan can be refinanced, once everything is complete in the house. It's a great option, but it's not perfect for everyone because of, the rate difference for sure.
Right. Okay, awesome. And now you said there's one other option?
There are. So I when clients come to me, I usually present them 3 options. So number 1 that we discussed already was the home equity line. Number 2 is that renovation loan. And then number 3 is using cash. So using either your current savings or checking account, using your retirement account or stocks or mutual funds. And what I tell people, if that's going to be an option that you use, please do talk to a financial advisor. I'm not a financial advisor. My job is to help you get a loan. Financial advisors can map out a plan and know if it makes sense for you to use any of your current assets to pay that renovation loan off.
It depends on who you talk to. Different people think different ways.
Right, and every situation is different. Some people that have a couple $1 million in assets, it might make sense for them to use that. But if it's going to be, most financial advisors will tell you, if it's going to be a vast majority of your assets, usually it's not smart to use that in order to do any renovation on your house.
So how long does it take to get the funding in place? So if we're doing a timeline for renovation.
Great question. So for an equity line, so in option 1, usually from application to the equity line being done, 30 to 45 days is pretty normal, depending on the bank that you go to.
Right.
But that's a pretty normal type. And once the loan closes, when you're approved by the bank, that money's accessible right away.
Right.
So you have that. That's anywhere from 30 to 45 days, depending on the bank. A renovation loan usually takes a little longer because it takes longer time to get the contractor to get the work done. So remember, you have to get the plans and specs done first on a renovation loan. I would set aside 60 days for that. We have been able to get them done faster in past loans, but a general average is about 60 days. And then obviously with your cash, that depends on your situation. Again, I would talk to a financial advisor about that.
Right. So on the renovation loan, the bank will require some additional information before. issuing the loan?
Well, it's similar to approval in a home equity line or getting a first mortgage. That part, approving you as an individual or a couple, that's normal.
Right.
There isn't much change there with a renovation loan. What changes is the renovation part of it,
Right.
Where the contractor really needs to come into play and play ball, making sure that they really get things done quickly and efficiently, so that the bank has all the information they need to make a decision.
Yeah, and we see this. My experience with renovation loans, for the most part, has been we have buyers that are looking to make a purchase, and they're making a purchase on a house that needs a ton of work, and so renovation loans pop up in that arena. Can you speak to that a little bit?
Sure, absolutely. I've actually done a couple of those in the last 6 months where people are looking to buy a home. And the renovation loan in that instance looks very similarly to when you already own the home, in that in order for the mortgage company to make a decision, we need to have those plans and specs done by a contractor. So where that can get a little tricky is you don't own the home yet. You're looking to buy it. Right. So the listing agent or the seller would need to allow you and your buyer's agent to get into the home with a contractor.
Right.
So the contractor knows exactly what has to get done, because the mortgage company or bank cannot issue a mortgage until they know how much work's going to be done, because that's part of the loan. Remember that renovation loan, it's an as completed value, so we don't know what the value is going to be until we know what the work's going to be.
Right.
It's different than just going to buy a home with no renovation.
So in either case, is the bank going to require more than one quote? Are they looking for multiple quotes?
Depends on the bank. Some mortgage companies will only require one. Some will look for multiple. That's something to ask your loan officer when you start the process. The company I work for, we only require one, but there are definitely companies out there that require more than one quote.
Yeah.
I mean, I recommend getting more than one quote anyway, just to make sure that you are covering yourself. I mean, contractors can have a very wide range in how much they quote on work. So.
Yeah. And in your experience, what's the timeline or process for getting the quotes and getting through that part?
Right. That definitely depends on the contractor. I would say during a lot of the pandemic, that was something that might take a month or two to get a contractor in there, and that was causing issues with sellers not having that much time to sell the house they wanted to get out before. Nowadays, I would say more and more contractors are getting it done quicker. They're getting in and out in a week or two. When I say in and out, to get quotes, not to have the work finished.
Right.
And that's one thing I forgot to mention is the work doesn't get finished on the house until after you own it, when you're buying, or in the renovation loan for a refinance that we talked about earlier. Once the loan closes, that's when the work gets done. So we're working on an as completed value. Then you can get the work done after the loan closes.
Okay, yeah. So you already have the money in place, and it's there. And on the renovation loan, is that also like a checkbook, or how does that work?
So the money, it's similar, yes, except that it goes to the contractor, not to the homeowner.
Okay.
So the contractor can be paid. Most banks or mortgage companies will allow the contractor to be paid upfront at the closing of the loan for 50% of the materials, so that they can get started on the work. And then the bank pays that contractor directly as work gets done. So a contractor go out there, they say, okay, well, project number one, maybe it's a bathroom, that's completed. So the bank will go out and inspect it, make sure it's completed, then they will pay the contractor for that work to make sure that contractor gets paid for all their labor and the materials they're going to need to do the rest of the renovation.
So in essence, you're in partnership with the bank and the bank representatives to approve the work that's happening as you go along.
Absolutely, and the homeowner won't need to pay anything out of pocket unless that money goes above what was estimated.
Yeah.
Usually there is. Most companies, including ours, will set aside anywhere from 15 to 20% additional to make sure, but there are some out there that don't set that money aside. And if that is the case, make sure as a homeowner you do have a little extra. Invariably, a lot of things go over budget. It happens. If anyone that's done contract work in the past would know that it happens, whether they open a wall and something's uncovered they didn't expect, or maybe the homeowner looks at everything being done and says, oh, I would like this done too. I would like that done too.
So that happens more often than not. In the middle of the project, they're like, oh, I didn't think about that. Let's do that too.
Right. So since the loan is already done at that point, the bank isn't going to provide any more money. So at that
Right.
point, you're going to have to use that as your own checking savings account or
Right.
retirement account. That's when you want to go to your financial advisor at that point, because the loan's already done. The bank won't supply more.
Yeah.
So if you want more, you need to come up with it yourself at that point.
And I know when interest rates were really low, I had a kitchen renovation and we did what they call a cash out. I'm sure the scenario needs to be set properly for that.
Sure.
What would be, what's the criteria for something like that?
Great question. A cash out refinance was very popular when mortgage rates were lower.
Really low,
right?
yeah.
And it works similarly to the first option of a home equity line in that it will only go up to the current value of a home, a cash out refinance. So the benefit of a cash out refinance is you get today's rates instead of the renovation rates, which I mentioned earlier, are a little lower. The negative is you can only do enough work to get you up to, usually it's 80% of the current value of your house. So that works for smaller projects, maybe depending on how much equity you have in your house. It could work for maybe a kitchen or new flooring or something like that, but it usually isn't going to work for the larger projects unless you have a ton of equity in your house.
And for me, it was peace of mind that I wasn't overvaluating my house at the time. I was pretty conservative.
Right.
So just to regroup, we have a equity line, we have a home renovation loan. You can pull assets from other areas of your personal assets, and then if your scenario lines up with interest rates and whatnot, maybe a cash out.
Right, absolutely. Cash out refinances are popular when rates are lower.
Right.
But yeah, those are the four options that we discuss when I talk to clients that are looking to do a renovation.
So Matt, do you have any other tips for us if an owner is getting ready to do this? What would be some tips to help them get through the process?
I think the main tips would be when a lot of people think of the work to be done. I know some of them in my life that they think of the shiny, how the house is going to look, and get ready to spend all their money. But before you do that, the biggest piece of advice I have is talk to your loan officer. Whether it's a loan officer at a bank, whether it's your mortgage loan officer like I am, definitely talk to a loan officer because you want to know what the financial picture looks like before you can even think about making your house look better and shinier. And also talk to your financial advisor to make sure you're doing the right thing financially. And then once you're armed with all that information with the numbers, then you can go and make your house look as shiny as possible.
Well, I know your years of experience, Matt, has always served us well as being one of our resources and our resource partners, and we thank you so much for always being there when we have questions. It is important to have the partnership, as you said, between the financial and the loan officer.
Right.
So thank you, Matt, for coming today. Great information for our viewers to help them understand how to fund their future projects. So I want to thank you as well for joining us today. If you have any tips or ideas on topics for us or any questions about your home, please email us at the email address on the screen. We want to earn the right to be your real estate concierge. I always invite you to join us on Facebook. Again, that's the Be Home resource page. Matt, thanks again for joining us. I'm Kathleen Goneau, and I'm signing off today. Be well and live well.